Thank you. So my name is, Jason Forbes, and I'm Chief Digital and Media Officer at Coty. For those who don't know, Coty is a $9 billion beauty company with about 70 brands globally, including CoverGirl, Max Factor, Rimmel, Clairol, and also does the exclusive distribution globally on the fragrance side of brands like Gucci, Hugo Boss, Calvin Klein, Marc Jacobs, and others. But I'm also CEO of a company called Beamly, which is a MarTech company. And really over the past 2 years in both of those roles, what we've seen actually is one of the biggest challenges happening is as consumer behaviors shift to online, more and more brands are looking to capture sales growth, e-commerce growth. And that ultimately becomes a very big problem as brands are unable in many cases to understand why that shift to online or e-commerce growth is not margin accretive. So as they've looked at their P&L, they're realizing that the fundamental economics of e-commerce aren't as attractive as in-store. So this whole session today is around deconstructing why that's the case and sharing some ideas in terms of how brands can actually drive better levels of profitable e-commerce growth. That make sense? So a couple of context slides. One is around the fact many people are believers in data, and that mix is definitely shifting. But this is reference from brands that invest in data and use data to drive insights typically outperform their peers by about 85% in sales and about 25% in margin. So the data points to if you actually make investments and use that to your advantage in understanding what the data is telling you, you as a brand in your category will outperform your peers. And really what's happening now is as more and more consumers shift to online, there's more signals available than ever before. And brands that are using those signals to fully understand what the upside could be are the ones who are typically outperforming. So this is recent McKinsey work, which on the left-hand side points to the fact that more and more players are actually in-housing a lot of these capabilities, particularly around data and analytics. There's been a 90% growth in demand for the building out at brands of capabilities, like, for example, data and analytics, programmatic, etc. But critically on the right-hand side, what you see there is top performers are the ones who are disproportionately investing in data science to understand how to capitalize on the data to drive better levels of performance. So just to frame how big an opportunity this is, the global e-commerce market by 2021 will be worth $4.9 trillion. You really can't get a bigger market than that. So very few brands, CPG brands in the marketplace are debating that the growth will not come from e-commerce. It's around if you're going to spend and shift time to e-commerce, how can you do that in a much more profitable fashion? So it's interesting. I'm curious, anyone here, maybe just a show of hands, the brands that you're dealing with, how many of them are talking about e-commerce growth being a critical part of their future? And how many are talking about profitability, like profitable e-commerce growth as being a key to their future? A couple, because certainly if you speak to some of the major consultancies like a McKinsey, a BCG, and Accenture or other, they'll all underline the fact that at the CXO level, this is becoming a very big discussion topic, which is we're seeing this growth, but we're not seeing it happen profitably. How can that be the case? Can you explain, can you deconstruct the business to understand what the root causes of better e-commerce growth, profitable growth, could look like? So, talk through 9 levers. So, top left, this should be familiar to everybody. This is an Amazon product page. The same is also true product pages on Boots, on Tesco, on Walmart, on Walgreens, on Tmall in China, etc. And underpinning those product pages is typically gigabytes, petabytes in some cases of data. And this data is increasingly being made available to brands, but in most cases, they do not know how to interpret the data. So imagine e-com teams of 3 and 4 people who on a daily basis are given incredible amounts of data they can import to interpret, but they don't know where to look. And that in combination with the fact on the right-hand side, this is illustrative trade terms between a brand and a retailer. And those trade terms are often formalized via a joint business plan, which happens on a quarterly basis. But the reality with e-commerce in most cases is those JBPs are fluid. So So on a daily basis, many e-commerce retailers are sending flags or checks back to a brand questioning, for example, the configuration, the taxonomy, the categorization, the delivery specifications of the SKUs or products that brands are sending to those retailers. What that means, therefore, most brands are unable to deal with that level of workload, and small teams are therefore unable to understand which SKUs in their portfolio are the ones that can actually drive greatest profitability. So at Coty, we have some brands with more than 3,000 SKUs. Each of those 3,000 SKUs are on a number of different retailer sites. Imagine a small e-com team or brand team trying to deal with that complexity of multiple retailers, multiple SKUs, thousands of flags coming back. Just the inbound is impossible. And this is a really big problem that will continue to be so, because what we're seeing is e-com teams tend to be small. Legacy CPG brands are very large in-store teams, but all the growth is coming from e-com. Like in Coty's case, in some cases up to 80% of net revenue growth is coming from e-commerce. So there's this disconnect between where the people are and where the growth is. And underpinning all this is a data problem that offers a really rich opportunity to try and solve. Sound good so far? Yeah? Okay. So bringing these kind of the levers I pointed out to life. So you see the 9 levers represented on the left-hand side. I want to spend a couple of seconds on each of them. So at the top there, you see the first 3, which are around signals. Understanding data signals or consumer signals is where everything should begin. If you have a foundation in data, you can understand what your consumers are telling you using social listening, social querying, live panels. You become much more intelligent around the decisions you make. That intelligence can be applied to creative. So what types of imagery, what types of copy, what types of video will work best for your target consumer? The third bucket is media. Once you've understood those signals, are you activating on the right media platforms across social, programmatic, search, and traditional? Are you making the right bets based on where your consumers are spending their time and what types of messages will resonate best with them? So those we call kind of the outer part of a flywheel. And the 6 below are the inner part of the flywheel. And they begin with assortment. So I kid you not, if you ask most brands a question, which of your SKUs on Amazon or on Tesco or on Walmart are the most profitable, most brands will be unable to answer that question. They don't understand the true SKU economics of e-commerce. So it starts with your portfolio. For your given portfolio, do you really want to offer all of your SKUs on Boots? The answer may be no. In many cases, some of those SKUs may be unprofitable. The reason why they may be unprofitable is the next kind of lever there you see, which is supply chain. So ultimately, are you able to service the demand of the SKUs you have online? If your fill rates are poor, if there's stockouts, Amazon's algorithms actually penalize you. So stockouts mean you drop down the search rankings. So most brands actually aren't aware of the fact that many SKUs aren't profitable or actually penalizing them because they are suffering from poor fill rates or from stockouts. So those 2 are kind of critical. The third really important one is around the page itself. And ultimately, as you think about the page, it's understanding, I'll flip back to price. If you begin with price, is making sure that your pricing is actually competitive, not just to competitors, but also to third-party sellers of your products as well. So pricing is a critical part. So those 3 then can be used to inform your actual product page. So the product page I shared with you a second ago, and that's where most e-commerce teams are focusing. They're looking at, for example, do I have the right content? Have I got like the right number of ratings and reviews? Have I got the right kind of like copy around my product? So kind of getting your page right on any e-commerce site is absolutely critical. If you do that well, then you can actually begin to think about the 5th or 8th lever rather, which is around site visibility. What are you doing in terms of driving the right level of visibility towards your page on an e-commerce site? I'll point over to the right-hand side here to give you a real-life example. This on the right is one of our largest brands at Coty, cosmetic brands in the US. And what it points to actually is if you think about 300 SKUs or 500 SKUs, what most teams are doing is focusing on the hero products, right? The ones that are driving the highest level of revenues. What this shows here is the profit to spend ratio on Amazon search actually was less than 1, meaning they're spending more money on search than they're getting back in profitability. But within the same SKU portfolio of the same brand in the US, okay, actually there are SKUs there on the left-hand side where the profit to spend ratio is 36 to 1. So the takeaway is simply for this brand to shift their AMS spend from hero SKUs to the SKUs on the left would deliver far higher levels of profitability. In some cases, it's that easy. It's simply that the brand teams don't have time to look at the data to understand, stop, you're spending too much, you've reached a peak. There's no point in increasing spend, AMS spend on these SKUs, shift it to elsewhere. And so you see these levers begin to work as a way to systematically deconstruct for any brand on any e-commerce business or retailer side to understand where is the growth coming from. And the last example is around promotion, that ninth lever. So we've actually looked at price elasticity of demand and promotion to understand many brands are over discounting, so 40% off for 6-week periods. So they're killing their margin because they're over discounting. And if you look at the sensitivity of consumers, you don't need to discount that much and you don't need to discount for that long. So these are our 9 levers that we found are consistently usable across different retailer businesses and are incredibly valuable for brands to understand if I want to drive revenue growth in a profitable way, both on retailer sites or on my own D2C side, understanding how these levers work independently and as a unit are incredibly valuable to drive faster growth.
Can I ask a question?
Yeah.
So is Amazon providing a price landscape such that you don't have to do that price discovery, that market price discovery manually? Are they providing data that allows you to make more automated, intelligent decisions?
The answer is yes. So first of all, Amazon makes that data available. Just many brands aren't able to interpret that data. But there's also third-party players like Clavis or eStore Media who actually scan not just your product page, but actually competitor product pages as well to understand how you're doing. So there's definitely tools out there. The question is actually architecting them and bringing them in a way that the brand teams understand. Yeah. Okay. So what we've actually kind of built at Beamly, and to be clear, I've mentioned others like kind of Clavis, etc. So parts of this are not unique, but certainly finding a way to ingest data, interpret it, and actually recommend decisions to brands to simplify their job. Make my job easy. I got 3,000 SKUs. I got 5 different retailers. I don't have the time to understand what I should be doing. Tell me what to do. Tell me which SKUs or an Amazon ASINs to focus on, and with each SKU, which lever should I think about? So some SKUs are going to have a supply chain issue. Others will have a pricing issue. Others will have a page issue. So prioritize for me. Make my job easier. So you see kind of represented here is these 9 levers represented in a tool that we've built that helps brand teams understand what to do. And on the right-hand side, what it's allowing brand teams to do in the US, in the UK, is to deep dive to understand for their SKU portfolio which SKUs should they focus on and which lever offers the best way to drive more profitable e-commerce growth. So, and what's exciting about this is actually it's not just in beauty or CPG. You can see on the left-hand side, kind of this approach we've begun testing across a plurality of different verticals. You can see represented on the left there. So a lot of brands, as they start trying to drive higher levels of market share, are beginning to understand how to take advantage of this and really thinking through this 6 levers or 9 levers more systematically to try and get to not just higher revenues, but actually a more attractive P&L as well. So I've spent a little bit of time talking about the 9, and I wanted to deep dive on the first 3 in particular because this is the festival of media, and obviously there's a lot of emphasis on creative and media. And what we found is actually those are 2 of the most important levers to play with, and if you do it well, you can really outperform. So to deep dive on those 3, I'm going to spend a chunk of time talking about consumer signals and how you can actually use consumer signals to inform thinking around creative, your decision-making around media to drive qualified consumers to any given product page, any website, to drive higher levels of basket size and conversion. And what's exciting here is there's often a disconnect between creative teams, media teams, brand teams, e-commerce teams. They're often disconnected. And these silos are leaving dollars or pounds or euros on the table. There really is a big opportunity if you start stitching the different groups together, using the same language to identify where the real opportunity is and align or marshal your resources accordingly. So this is a sliver of a playbook, and I'm not going to go through this level of detail, but just to bring an example to life with simplified wording, okay, because I'm going blind. And what you see kind of represented here are the 4 levers. I just wanted to start showing you some of the interplay. I'm going to walk back here so I can actually read it. Some of the interplay across the different levers. So on the consumer signal piece here, So one of the things brands can do is actually more systematically evaluating their product pages. I gave you some of those tools a second ago. By looking at those product pages and actually complementing that with live panels, you can understand for every single consumer, where is the drop-off occurring? Is my media not resonating? What types of media inventory are driving higher levels of conversion? What types of qualified audiences are coming? So use that to understand what's working right now. Okay? If you do that well, you can actually understand audience affinities. So these types of behaviors or attitudes are likely to be associated with the types of people who buy more of your stuff. We're using that to basically say, once you've understood that, you can inform your creative development, right? So ultimately, create custom assets per retailer or per consumer cohort to more likely drive that conversion, and also create kind of bundle content, which again, you can prove to show is going to drive higher levels of sales conversion when those consumers get to an e-commerce site. Then as you shift to kind of media, what we can therefore do is upload those audiences or those affinities into whitelists. So these are the types of audience affinities I want to go after, because I've seen historically, using regression analysis, that these are the types of people who buy more of my stuff, okay? So you're beginning to connect signals to creative development to media. And if you do this really well, it begins to kind of play out here, which is ultimately you can understand across keywords, for example, which keywords are trending. Based on those trending keywords, use it to inform the copy, across Facebook, Instagram, YouTube, like any type of way the keywords or a trending keyword can inform not just words, but imagery as well. But then ultimately to use those keywords to determine when they land on the page, have you got the right narrative to drive better levels of conversion? So you can begin to see how all the different elements work together. And what we're seeing kind of brands, not just at Coty, but outside of Coty, they're beginning to use this intelligence to revisit retailer discussions to say, look, let me talk through my SKU portfolio. Let me describe to you where I'm proposing to retire these 50 SKUs. I want to reintroduce these 17 because they're trending right now. And let me show you how we can grow the category together. So it's actually arming the sales and retail teams with a level of data and intelligence that they've never had before. And to be very candid, this is messy, difficult work. It begins with a common language. Like often the words that the brand team uses is completely different to what the e-com team uses in the exact same company. And that e-com team is speaking to a retailer group, okay? And brand and retailer nearly never speak, and when they do, it's just different languages. And then a finance team is looking at accounts payable and accounts receivable and can't understand why targets that were introduced before aren't translating into an EBITDA number. So this language issue is a very big problem, which I'll come back to a little bit later. So to bring this live with a few real examples. This is, within that first kind of like pillar, if you will, of consumer signals. I wanted to touch on a couple of interesting examples. One is called jobs to be done. Who here has heard of jobs to be done? Okay, it's a Silicon Valley methodology that basically looks to understand the unmet needs. I'll give you a couple of examples. This is consumers, people don't want a 1/4-inch drill or a 5-centimeter drill. They want a 5-centimeter hole, okay? Another very simple example, people don't want Google Maps. They want to get from A to B more quickly. So if you think about it, many times, brands are guilty of actually creating a product that people don't want. But the product helps get to the need, then they're going to be bigger fans. And so this had never been done in cosmetics or beauty before. So we've taken it and kind of customized it for our own. And so in beauty, what we've actually found out is people don't want makeup, typically. Okay? What they really want is to look the way they want. And a more kind of prosaic insight there is actually what consumers want are changes that actually suits their physical features. Okay? If you pause on that again sounds really obvious, but actually we found that, you can kind of see the little circle there, there's a massive unmet need that all beauty companies have missed out on. In the US, the UK, China, and Germany, is actually cosmetic companies are not meeting that need of, if I'm 45 years old or if I'm 65 years old, showing me a young 21-year-old blonde in my Facebook feed is not going to inspire me to think that the products you're offering are relevant for me. Make what you're recommending relevant for me. And if you can do that in a really personalized way, then you will grow share. And I want to bring that to life because it's a good example. But the takeaway for the group is this jobs to be done or other methodologies like it are super valuable because it provides signals around consumers brands can use to reinform their decision making. How you message to consumers, what types of media platforms you activate for those consumers, and ultimately, how do you drive higher levels of basket size and sales. So this, I really like this example. So this is Max Factors. So for those who don't know Max Factor, it's a very well-known brand. It's got an older demographic. So she's about 45, 55 years old. So when she sees young blondes or young anything in her feed, if she's even on a feed, okay, it means nearly nothing to her, okay? And so what we did, therefore, is we used jobs to be done and actually found, therefore, that what she wants are products or looks that she feels are relevant to her, okay? So what we ultimately kind of have done, therefore, is we worked that need into a technology, augmented reality. And what the AR does is it kind of, before it scans her face, okay? So literally on a mobile phone, no app needed. It scans your face. And in 2 seconds, based on your eye shape, your lip structure, your ethnicity, and your age, it actually recommends a set of products relevant for you and lets you see those looks literally using augmented reality. So you can kind of see an example of some of the attributes on the left-hand side here in terms of what it scans for. And using those signals from that consumer actually go through a marketing intelligence platform, goes through an enormous number of combinations to recommend 3 products that, given those characteristics, are much more likely to be a fit for you. So if you are a woman with fair skin, with full lips and almond eyes, then these are the products that literally using machine learning, you can actually train the model to make the right recommendations for that consumer. So it's a sophisticated example of how you're beginning to take an unmet need, apply data to make a recommendation using technology, not for technology's sake, but because that need is being established. So you can kind of see a walkthrough of the journey here, whereby literally across media, you're activating imagery relevant to her, you're bringing her to a landing page, she can kind of scan her face, therefore she instantly develops a custom profile. Based on that profile, she can actually see via AR what the look or the SKU will look like on her face. She's actually given makeup tips relevant for her age, and if she likes it, she's brought then to a retailer page to buy the product. And why retailers love this and why we love this is it moves you from a €4 lipstick to a €24 look. Because you're not just recommending lipstick, you're recommending mascara, foundation, etc. So it's a really elegant way to unlock a need and drive basket size and e-commerce conversion using some of those pillars. That sound good? Yeah? Any questions so far?
Obviously, AR for that particular demographic is a step. What's the adoption like?
Yeah, so really good question. And I'll come to another example to talk about adoption. We've just launched this last week with Boots. And the fun part about it is we are only targeting women in their 50s. And because women in their 50s tend to be less app comfortable, we're using a mobile web experience. You don't need to download an app. You can literally kind of do this on boots.com. So early days yet, but just back on the previous slide, one of the things we have seen is the scan to completion, to Q&A, where she's actually asking questions, is 39%. So it's a very, very encouraging number to say, wow, we've got her through that journey whereby she's actually finding out questions to get answered. So as Boots starts sharing more of the data, we'll actually see what the full end-to-end loop is. But the goal is, regardless of what the early results are, we're looking to train the model to find, people like her tend to buy this much stuff, either via look or SKU. Therefore, let's do lookalike modeling to find more people like her. Okay. I think I touched on kind of content a second ago, and I just wanted to kind of use this kind of slide to talk about the fact that what we're finding super valuable with brands is if you share trending content in their verticals. You can actually help a beauty brand, for example, to understand, in my category, what's trending right now for consumers I want to target. But we've also found that super valuable to take that content and actually sit down with retailers. This is a real-life example from the US where with retailers like Walmart, Walgreens, and Target, what we did was instead of a brand like CoverGirl saying, hey, we're relaunching, we think this is going to be great for your shoppers. Instead, what we did is we tested the look with their shoppers before we even got there. So we went to Walmart and said, look, we've already tested this on social with more than 200,000 people who have an affinity towards Walmart. These of 10 looks, these are the 3 that pop the most. And this example here is actually from China, where we did something similar with JD.com and with Tmall. So again, it's using data to reestablish credibility or establish credibility with the retailer by saying, look, we've actually tested this with consumers, with your shoppers. Here's what's resonating the most, which builds confidence to say, yes, let's stock these SKUs, not just online, but in-store as well. Okay, this next example I like a lot. This is with Clairol. And for those who know Clairol from the US, Clairol relaunched recently and kind of have the typical Clairol demographic, again, much older. She's typically been dyeing her hair for 10, 15, 20 years, okay? And when they relaunched the product, they actually reduced the time it takes to work the process from 40 minutes to 20 minutes, okay? And there used to be a tingle when you put it in your hair. No more tingle, okay? A lot of R&D, why would you want a tingle? So they relaunched, and women who've been using this product for 10, 20 years didn't read the changes on the box, and they didn't advertise succinctly the changes in the box. So a lot of women left the product on their hair for twice the length of time, or longer because they didn't feel the tingle. So headline would be, a lot of very unhappy Clairol consumers with hair outcomes that weren't quite what they were expecting, okay? So what we did therefore is, okay, this is a problem, okay? How can we use data to understand how we could actually address the problem? So what we did was we went after and found these lost loyalists, right? And ultimately what we did therefore is we understood who is she, how old is she, what types of imagery works with her, where does she spend her time? So for example, stay away from mobile. She spends way more time on desktop. Stay away from online video. That's not going to work. You need to use banners. As old school as those are, that just seems to resonate with her. And what she cared the most about was actually, help me find my old shade. It's like kind of like classic Coke. I want my old, because they changed the shade taxonomy. So we created a microsite in a matter of days that actually recaptured those lost loyalists, helped her find original shade. And when we connected that with a DMP, a data management platform, into IRI, we saw a 45% sales increase versus category. So a really kind of impressive result. And actually, as importantly, we scaled this out from several $1,000s to hundreds of thousands of dollars in media spend. And that kind of on-site number, about 47% staying on for 30 seconds or more, stayed the same. So a really great example of using signals to address a problem, introducing creative and media and the sales outcome to create that feedback loop to drive an e-com result. And actually, in this case, in-store results as well. Okay, last example. This is with a coffee competitor of Nespresso's. And we actually use jobs to be done here as well. And the insight around coffee capsules is people don't want coffee capsules. What they really want to say the coffee capsules is they want intensity, they want aroma. That's the real need that they're looking for. And so what we did therefore is we actually ran a kind of a very powerful campaign identifying ultimately what types of creative would work best with that type of consumer. And again, what you see here is in less than 3 months, we've grown D2C sales for this kind of player by more than 10%. So again, this kind of end-to-end loop, bring it all together. So, and this final one is with a retailer. And this is a UK-based e-com pure player. And what we did with them is, one of the challenges you'll find as a brand is actually convincing retailers to share data, right? It's one of the biggest issues. They won't share granular sales data. And it takes time to win their confidence. And so over 4 different campaigns you see kind of represented there, we began with simple sell-in, sell-out data, and then began to evolve to a pixel drop. So we actually now have a pixel drop on their site, which allows you to understand for every single consumer who comes to the site, who bought, who did not bought, how much did they spend, did they come back again? And we've used that ultimately to look-alike model and find more people like the ones who buy on that retailer site. And that's actually delivered an 11x return on ad spend, some of the highest ROAS they've ever seen. So again, these point to a number of different examples whereby if you start connecting the dots, you really can plausibly demonstrate as a brand how to drive profitable e-commerce growth. Okay, this is the last slide. And I think what you see represented here is work that leading kind of brands are now beginning to do to describe what the impact on a P&L can be. So just to give you some examples here. So you see the 4 pillars we've just been discussing, beginning with consumer signals. We've begun to use consumer signals to inform what pricing sensitivity different consumer cohorts are likely to have in a given market on a given retailer website. Okay, so you can kind of see therefore signals informing pricing as you go from gross to net on a P&L. Another example is around kind of creative and around media. Actually being able to demonstrate, instead of talking about CPX or CPC, or cost per view or video. It's actually translating that into SG&A. Hey, CFO, we can actually reduce your SG&A. We can deliver the same level of reach for lower levels of spend by better demonstrating the types of audiences you want to go after. So it's just changing the language into phrases or words that CFOs or the CXO team understands, which has proven to be very powerful and valuable in unlocking bigger budgets. And the last one there in the main kind of wheel is around site itself. So you see some examples there of using the levers I described at the beginning to really to demonstrate the impact you can have. So for example, by better understanding in supply chain demand forecasting, you can actually reduce levels of returns. Returns are a massive problem for nearly every brand in CPG. Or another example, by better understanding demand forecasting your supply chain, you can actually plausibly drive impact around other parts of COGS, like inventory, right? So if you're reducing inventory, therefore your working capital improves, and that therefore kind of helps not just on the P&L, but on the balance sheet side as well. These are topics that most brand teams don't talk about. And I guess the takeaway is it's not that complex to begin to connect what brand teams do into a P&L. And what we're finding is actually if brands do this well, then it really changes the dialogue and opens up a much different conversation around how to drive profitable e-commerce growth. So I think ultimately, in part, just for clarity, I think this, in some cases, raises more questions than answers. But certainly as we're looking to brands that see e-commerce as being a critical part of their future growth and of their valuation in the marketplace, the ones that are connecting activities across those 9 levers into a P&L are the ones that could actually point towards higher levels of profitable e-commerce growth. And that's what I'm increasingly passionate about. So wish me and players like me luck, or watch us die trying. So thank you very much.
Thanks, Jason. Is there any questions? No?
When was so the work that you said you were doing with boots and the kind of, is that like in the UK as well as the US?
UK, yes. If you go to Boots now and Max Factor, you'll actually see the experience we just walked through there. Yeah. So, and I think what's exciting is in nearly every case, and it's not just Cody brands, it's other brands we're working with and we're not working with as well, where these conversations around how we can grow the category, you start there. How do we grow the category together? If you're seeing declining in-store sales, Mr. or Mrs. Retailer, how can we actually use consumer data signals from online to inform not just our decision-making to drive e-commerce growth, but actually in-store growth in a more profitable way. And so it's been great to see retailers and brands working much more collaboratively with kind of that consumer signal foundation. Yeah.
Anything else?
Yes.
Yeah, Ramsey?
So when you're doing paid media on something like Amazon, you can still have the shopper marketing mentality, really data-driven. When you begin to go off, and whether it's search, which is very like lower funnel,
Yeah.
or even whether it's TV or anything where you don't have the same kind of fidelity, how do you blend it? Or do you blend it together, or how do you blend it together when it's a different language and it's a different level of targetability?
Yeah. So it depends on the retailer is the first answer, I guess, because ultimately with Amazon, for example, there is no sharing of consumer data, right? You provide SKU level granularity, but not consumer data. Whereas some of the Chinese platforms actually provide like consumer data. Some of the retailers we're working with in the UK and the US are providing a pixel drop. And in that container tag, it actually allows you to understand a lot more. So the simple answer is, the more atomic the data sharing, the more you can do, right? But with a pixel drop, that's a UID, a kind of unique identifier for that consumer in an anonymized way. You can actually use that via data management platform to connect that person with other characteristics of them, which allow you to kind of like pool those groups together and therefore do much smarter things. So what we found is you need to be kind of like flexible or nimble. So in the Amazon case, we're typically focused more on the Amazon ecosystem, whereas with other retailers, we're looking at other types of media inventory, for example, much more around kind of programmatic and much more around social, et cetera. So it very much depends on the retailer and the type of data dynamic. Yeah.
I'm just curious about, because obviously you have a variety of brands, some of them being more like luxury versus not
Yeah.
much. And how do you, in terms of, do you have like varying strategies for
Yeah.
each one of them? And
Yes. So and it's not just the brand, it's the market as well. So what some brands would like to do or prepared to do is quite different market to market. Certainly on the fashion house side, kind of across several of the fashion houses, there's definitely a much greater appetite to see how brands or retailers can bring data to inform better levels of decision making. So a couple of fashion houses just in the past kind of 12, 18 months have begun for their own websites, like their own .com sites, to actually look at the data to say, when I acquire consumers like this, conversion rates tend to be X% higher, or consumers with these characteristics tend to buy more. How could I use it to find more people like the consumers who buy on my site? So I think in every case that journey is different, right? But I think by what we found is by demonstrating credible stewardship and knowledge of the brand and I guess kind of like competence around what the data can say and how it should be seen as one part of an overall kind of brand experience, we're definitely seeing some nice traction across all the brands we're working with. Yeah.
Great. Thanks so much.
Excellent. Thank you so much.
Thanks, Jason.
Thank you.